Hope everyone is doing well. I want to answer a quick question someone asked me, and it has to do with the Great British Pound Dollar 5-minute chart. And let me go back and find what they did. So it's right in here. So they went short below bar 2, which is here, this bear bar, 5:45 Central Time, for two reasons. They said trap bulls bought above bar 1. I'm assuming this is bar 1 right here. It is. And so they shorted because they thought bulls were trapped that bought this bar. And they said it's a 50% pullback based on this sell-off. Trapped bears out. Trapped bears out using a tight stop above the possible tight trading range. I'm assuming they meant, maybe selling above here. I'm not quite sure. So anyways, they shorted below this bar. You can argue that's a major trend reversal. I wouldn't sell there. There's a few problems with it. One is, so let me do like this. So you're in a bull channel, strong bull breakout, couple legs, pull back, testing here. This is probably a trading range. Enough sideways down, you may get a second leg down. And now we have consecutive bottoms. So 1, 2, 3, 1, 2, 3. Tight enough channel, first reversal up may fail. So strong enough breakout though that you have big up, big down, big confusion, probably going sideways. Strong enough breakout, you may get a second leg up. This is a surprise bar. If I'm short, I'd probably get out above this bar, but now I probably should get out above. And, again, this isn't a great area to be short, because if this is the trading range, then the top of the trading range may be up here or here, so not a great area to sell. So if I did short here, I'd get out above the bar. Big bull bar, not a great short. Big lot of bears would get out above this bar, and that's probably my main two problems. Is you can sell, stop up here, and bet that you get a second leg down. This is a possible higher low or lower high second leg. I think this is too strong, where the odds are you'll get a second leg up. Also, my problem with the 5-minute chart, let me back up. I used a wide stop and had an intention to scale in, but the market hit my stop loss and then came back down. I'm wondering what was wrong with my setup and management. Yeah, so, okay. I see what they did. So they did not put a stop up here. They sold and put their stop up here, which is okay. But again, the problem is, if this is the top of the trading range, I don't want to get out at the top of the trading range. I want to sell at the top of the trading range. So if I'm going to sell, if I'm not getting out down here, and I'm not getting out early, I'm certainly not getting out up here. So I have two choices. I can get out on bull strength, where I think the market's going to go higher and look to sell higher, or I'm selling more up here and using a stop, way up here. So that's the problem with what you experienced in this trade. Is I'm assuming you were short, you got stopped out at this high tick, only to watch the market go all the way back down to your stop and turn up. And there's a couple reasons behind that. Traders knew the market might go above. They saw this breakout. They looked to sell higher. They wouldn't sell below this bar. It's a doji, strong enough bull bar. They're not going to sell here. They might sell here. Most traders would wait for the breakout, be disappointed by this bear bar. Now you get a second entry short. So it's a second failed breakout of this high. So we broke above here. We tried to reverse during this bar right here, this bear bar at 620. Broke above again, and now we're turning down. Now we're going outside down. This is where the bulls ultimately gave up. So a lot of bears would sell here, and we got a couple legs down. One thing I would say though, is 5-minute charts with Forex, you have to be careful. If I still think that, I know Al says the minimum is 10 pips, and I get that, but I would really figure out what your own commission cost is and bid-ask spread, because that plays a factor in your minimum scalp size. If you're paying, I don't want to go too far into the math, but you need to figure out what you're paying every trade in commission, because that if 10% of your profit goes to commission, that's really expensive, and I would really work on getting that down to 5% or less. And one way you can do that is trade a 30-minute chart. So now this entire range is really small. If you have questions, comment below on that. Now let me get to the E-mini. And for this person, they can reply if they want more clarity. So this is going to be over the 23rd, coming into the day, Friday. Let me talk about the daily chart. Here's the daily chart. We sold off, hit 20. This was a 20% correction. One thing I said over here was this was a 19% correction, and I thought a 20% correction was so obvious. I thought we'd have to get there. And a lot of times when you have an obvious support level or resistance level, the market will get close to it and bounce, but there won't be enough traders up here willing to buy because they still think the market may need to retest it. So this often happens when there's an obvious magnet where it'll race down, have a deep pullback, and then break below it here. 20% correction. Odds are there's going to be buyers, so the odds were we were going to go above this high and possibly have a bull trend day, which we did with a small one. 5-minute chart. So yesterday's high, strong breakout, we gapped up, and overall it was a small pullback bull trend, but the small pullback trend was weak, and therefore we had a deep pullback that evolved into a trading range right here. Let me just kind of do it like this. There we go. So bar one, doji bar, gap up. Odds are you're going to pull back to the moving average, probably sellers above and probably buyers below. Tight enough channel, any bear bar is going to get bought, but we could sell off all the way down to here. Big bear bar. So everybody's wondering, are there going to be buyers at the low bar one, scaling in lower? Are bulls willing to buy this close for a scalp? They clearly bought. Bar three, you have the problem of here. It's forcing traders to buy high in a possible tight trading range, just under the highs over here. So not great buying. It's probably limited order market, and there's probably bears selling above the high of this bar, high of bar one. Breakout, but it closed just above this high on the 20th, which was Friday. May get a pullback here. Tail, it is always in long, and the only problem I have is, and there's a tail here, but the problem I have is I think we're going to touch the moving average. If the market's at 39.40 and the moving average is at 38.90, I'm not willing to buy 50 points above the moving average. It's just too far. So if it keeps going up here, I'll wait. Second entry short, so low one, low two, two-legged pullback. Reasonable short, betting on the high of the day. Consecutive sell climax is tight enough bull channel that this will probably be minor, but it's an okay sell. Stop above. Good follow through. Some bulls will move their stop, and then big bear bar, but tail closing near the moving average, the high yesterday, and it's closing. Let me see if it's closed at the low. So the low is 13.5. The close here is 13.5. It closed at the low and not below it. So a sign of weakness by the bears. You have to ask, why couldn't the bears close strong? Why couldn't they close below the low of this bar? Why did they close at the low? Another thing to point out is when you have resistance on higher time frames, the market usually pulls back when it breaks above it. So often you'll break above a high of the prior day, such as here, and then the market will have a deeper pullback, and then it'll retest and try to break above it again. It's a higher probability. And you'll have some traders that will scalp out and look to buy a pullback, knowing that the market may test back at this high. Doji bar, while it doesn't look strong for the bulls, it's disappointment for the bears that are betting on a failed breakout. It's possible this is the start of a channel up. So if this is a failed breakout, we may test the upside. Still probably a second leg down, and we'll test the moving average. Consecutive bull bars, we're reversing the sell-off. So a lot of bulls, for one, they may be giving up here. Bears sold this high, scaled on higher, couldn't get out of break even, so now they're trapped. Doji bar, and what happened here, same thing. The high of this bar is, you can see my cursor, this high, this low did not go above this high. It trapped bulls, and it trapped bears. Those remaining bears gave up here. Possible wedge, 1 pullback, 2 pullback, 3. Some bears, it's not a great place to short, but it's also not a great place to buy. It's an outside up bar, big risk. Some bulls will buy above it, betting on continued up. Other traders will wait to the moving average. I would rather wait for pullback. And 1, 2, 3, 4, 5, 8 consecutive bull bars. First reversal down is probably going to fail. It is a parabolic wedge, but it's just too tight. So almost consecutive outside bars, but again, tight channel. One thing to point out, again, here, almost got to the moving average. Tight enough channel, first reversal down was going to fail, so bulls probably scaling in lower. Big bull bar, breaking out above this range. It is certainly possible that this is some sort of measuring gap. So trading range, bull breakout. If we get a gap here, it's a small pullback bull trend. It doesn't look like it's going to be a small pullback trend. It does not look like it's going to be this for the rest of the day, but it might. And, maybe in hindsight, I know we didn't go down there, but maybe it was here. Breakout bar, weak follow through. So again, looks like a trading range, probably going to fail, but tight channel. Second leg up, bear bar. But again, it was completely reversed and we broke to the upside. So it's climactic. It's consecutive biclimaxes here, here, here. After all this, best looking bull bar, probably 60% chance we may get a small second leg, but the market's probably going to fall back to here and test the moving average soon, which it did. And kept rallying, starting to go sideways. We reached the moving average, but now you're in a tight trading range, so not a great place to buy. Breaking below the low of the past several bars, follow through, may get a second leg down. The bulls, they have a bull bar. They're hoping it's a wedge. 1, 2, 3. Testing the lows down here. However, this looks like a leg in a trading range. We're probably going to sell off a little bit lower. It's a credible buy, and we may have to go lower though and test down here. Didn't trigger. Big bear bar, doji, and now we rallied back to the highs. So market's now probably in a trading range. Bulls are buying lows, betting that this was a bear leg in a trading range. Bear leg in a trading range usually follows a bull leg in a trading range, which it did. And broke just barely to the up, broke above these highs, just barely turned down, and really went sideways into the close. Here, double bottom, it's a wedge, 1, 2, 3, but again, tight trading range. In the middle of this tight trading range. So, not a great buy. And that was the rest of the day. So overall, small pullback trend day. And what's frustrating about this day is it's never clear. You know, it's always in long here, but it's at the top of this trading range. Breakout bar, but it's not at the moving average. This might be exhaustion, maybe second leg up. Bears, always in bears. You know, what do they do here? You know, it's a wedge, 1, 2, 3, 1, 2, 3. So you got a wedge here, second entry short. You know, we could easily, and this is the problem with small pullback trends. If I'm long, where's my stop? Here or here? Maybe it's here. So what's the probability if I'm willing to buy below this, if I'm willing to hold below this bear bar, which also means I'm willing to buy below it, it's the same difference. If I'm not willing to buy below the bar, I should not stay long below it. So what's the probability price will fall? Let me back up. If I'm long, stop down here, what's the probability price will go 1 times my risk? So from here to here, what's the probability price goes from this low to this high before it goes down to here? I don't think there's a 60% chance. It's probably 50-50 at best for the bulls. Therefore, I think a lot of bulls would get out, and that's what makes this difficult. Traders get out. It doesn't reverse consecutive bull bars. Some bulls will buy at this high, betting that those bears will give up, which they did. And, you know, if you buy up here again, it's too late. Market pulls back. So, overall, not that exciting of a day. If you have any questions, feel free to comment below.